cost to complete is $40,000. Now here's the point about this. Although this project 2 is not completed, it does appear in 2008 that a loss of $20,000, i.e. the difference between the contract price of $300 and the total estimated cost to complete, $320,000. So the difference is $20,000, and that is the loss that Pell would report in 55, which is A, in 2008. For 56, if Pell used the percentage of completion method, what amount of gross profit or loss would Pell report in its 2000 income statement? Well, first of all, for Project 2, regardless of whether you use the percentage of completion or completed contract, Pell would still report the loss of $20,000 associated with Project 2. Now, with Project 1, the contract price is $420,000. The estimated cost to complete is going to be $240,000 plus $120,000, which is $360,000. So that means the expected gross profit on Project 1 is going to be $60,000. Okay? Now, what we need to know is, what is the percentage complete? So, we have costs incurred so far of $240. Total cost to complete is $360. So $240 divided by 360 is 0.667. We multiply that by 60,000, and we get 40,000. Okay? So, here is the point about this is, for Project 1, they're going to report a gross profit of $40,000. For Project 2, they're going to report a loss of $20,000. So when we net these two amounts out, we get $20,000, which is B for 56. Now, let's look at 57. Which of the following is used in calculating the income recognized in the fourth and final year of a contract accounted for by the percentage of completion method? Well, A, we always got to use actual costs, so that's A. And so now income previously recognized, that's also included. So the answer to 57 would be A. Now, let's do 58. A company used the percentage of completion method of accounting for a 5-year construction project. Which of the following items will the company use to calculate the income recognized in the third year? And the answer is going to be B. Progress billings are completely unrelated to the amount of income you would recognize in a year. The only thing that you need to factor in is the income recognized in prior years. Okay, so 58 is B. Let's look at 59. The calculation of the income recognized in the third year of a 5-year construction project accounted for using the percentage of completion method includes the ratio of total costs incurred to date to total estimated costs. That's it. That's A. Listen, we did this right here. Total costs incurred to date, total estimated costs. So A is the correct answer to 59. For 60, when should an anticipated loss on a long-term contract be recognized under the percentage of completion method and under the completed contract method? We just had that. When is that going to be? As soon as, immediately, or as soon as the loss it recognizes is going to occur. So for both percentage completion and completed contract, the loss is recognized immediately. So the answer is D. All right, one last one. In accounting for a law 61, in accounting for a long-term construction contract using the percentage of completion method, the progress billings on contracts account is a contra asset account. All right, so although I've tried to go over a good deal of the representative problems from this module, I would encourage you to go through all 61 questions. As you can see, there's a pattern that develops in terms of the types of information that's being tested, the types of calculations you are required to know as well. So I'm going to come back and do the simulation, but I do encourage you to do all of the problems in this module. See you back here in a couple of minutes.